My goal for today
don't have-
is to only
With Ama, right?
eat one nugget.
Ama.
The Swenson's nugget is very good.
Is to only eat one nugget.
This is the most important econs lesson that we have to learn because
I feel like I'm not
who's the
selling
econs
house
student?
anymore. I like, wow.
because by understanding this, it will shape our daily decision. Okay.
I was just telling my wife that.
who like went deep into econs during your schooling years?
No.
I'm a sociologist.
Okay. So all the textbooks are Keynesian economics.
Okay.
All right.
Got here before.
Okay. Keynesian economics, unfortunately, gives control to central banks. All right. So now the whole world is okay. Like Singapore, we have MAS, and of course, this is like capitalism, right? But the important thing to note is that when the central bank want to bring down interest rate, they have to increase money supply.
Yep.
Mm-hmm.
When they want to
come in.
increase interest rate, they have to decrease the money supply.
Yep.
This is an inverse relationship, and it must happen one. Okay.
Mm.
So let's have a look at this. What is M2 money supply? So there's M0, M1, M2, M3.
Mm.
Basically, there's differentiation in terms of how they calculate, like whether is it like the money in the deposits or future money that has not been collected and stuff like. Okay, but generally in the whole world, we use M2 as a money supply gauge. Okay, this means, okay, the important question to ask ourselves is that why is it increasing? Why is it that year to year it is increasing?
Because people are borrowing.
And
But-
fantastic.
yeah.
Okay, and how is money being created? Because this money supply, that means why are there new money that's being created? Okay.
When somebody borrow, the money is being increased,
Yes.
digitally printed like
Correct
in a
lah.
way.
Fantastic. Okay. Which we have I think we've talked about this in the last few episodes, is that because the whole world is operating under fractional reserve banking system.
Mm.
Meaning that if I'm a bank and I'm licensed by my central bank in my country, I do not need to have $10 to
lend
loan
them.
out $10.
yeah.
I just need to have
$1.
For
yeah.
example, $1.
Example 10x or 5x, depending on what my central bank gives me. Maybe my central bank gives me a 10x license or 5x license. That means $1 I can loan out $10. And if I have $1 and somebody wants to borrow $10 and I have a collateral with the person, for example, or collateral on certain assets,
House,
right?
car.
I loan out $10, that $9 is instantly created. I just need to press the button, it's printed out.
Yeah.
Yeah. And that goes into the money supply. Okay, what does this mean for common people like us, right? Who is not in the finance industry, is that if you leave your money in the bank, just imagine what is going to happen is that now you got $100,
You take our money, go and lend him lah.
we got $100 in the bank, but behind the scene, the money supply is expanding.
Yep.
Your $100 vis-a-vis this money supply is
Yeah,
going to
yeah.
get smaller. And what's going to happen is that your purchasing power decreases by 7% per annum. And that's the average rate of monetary money supply expansion per annum. And if you do not keep pace with this $100 is not going to buy you anything in 10 years, because in 10 years, it's going to deflate down by 70%, which is why homes are inflated to that amount year on year. Okay, because you see, logically, a property is a deteriorating construction. A 99-year property or freehold property or landed property is deteriorating by construction every year. It does not become stronger or it does not become newer or better. We have to maintain it. But why is it that the value keeps appreciating? It's not because the property appreciates in terms of its value. It is because our money supply is expanding and the value of our dollar is depreciating. So that get funneled into harder assets. So actually the painful thing is that if we don't realize this and we don't take action, what is going to happen is that your wealth is going to depreciate on a year-to-year basis that after 10 years, you can't buy anything. Especially if you are looking at real estate. And that's a very hard truth that we really hope a lot of Singaporeans will understand. Is because we've been hearing so many people trying to time the market. And if we are born in another country and there's limitless amount of land supply and the government don't control anything, for example, in certain countries that start with a B or start with an M, example, I will be a rental, I'll be a tenant my whole life because it'll be better off for me to rent. Because the moment I buy a property, 10 years later, I'm pretty confident it will not appreciate. I might as well just enjoy all different properties and continue renting, right? Because they don't control the supply. Until a day that they start to control supply, bring population, immigration, open up their policies, then if they have that shape and brick and mortar like Singapore in terms of like investment mindset, then I think it's a different story. But if we're in Singapore and we try to time the market, we're going to be priced out year on year. And that's very dangerous for the next generation, I feel. Right? Any thoughts?
I think also coupled with the fact that we are a very small, we are limited in terms of size. So that's why you have certain products that would appeal to the people living in Singapore to grow, to keep it as assets rather than liability. Like you said that there are a lot of things that you have that isn't becoming better over the few years. Yeah.
So that's because the Singapore landscape is very, very unique, right? So like just like I mentioned, that actually like building is a depreciation component. The entire value of the asset consists of the building also plus your land pricing. Just like for your cars, right? Your cars, why the last few years is increasing in price? It's because the fundamental, like the COE value is increasing, right? So it's just like no land price increase. So why did land price increase? Because fundamentally, number one, right, there are two components to this. First one, the Singapore government did a great job in building a nation. So like EDB brings a lot of investments, MNC to come in, create jobs, you know, like getting higher level kind of, more, what do you call it? More productive,
commercial,
you know, like higher value kind of like income, right? So that's why we have funds that come in. Hence, we can create productivity. GDP goes up. So Sing dollar is strong. The other very interesting thing is because, right, this is probably the only country that has the most longevity in terms of planning-wise. Because one government for like 50 years, right? You can really plan for the long term. You are not scared, okay, I need to appeal to the next 4 or 5 years. So like, if you plan for something, MRT network, everything is building on the previous infrastructure to make everything become better. It's not like a haphazard kind of planning. And all these things, right, makes, number one, the land more valuable, right? And lastly, is also because something very interesting, right, is how the entire encouragement, right, of property ownership through, of course, policies, as well as through monetary injection. So, for example, grants, BTO is the fundamental base of monetary injection to the people, right? So you own, let's say you go to HDB. This money goes into your HDB, and then when you upgrade to the private property, this is in circulation in the entire real estate market, right? So combination, right? Good ability to bring investment. SGD currency is strong. Very good planning because it's only like, you know, like one government. Basically it's like, you know, like one party. So we can really plan for long term. So you always know that like, if we can always plan for long term, we will always get better results, right? So all this thing creates that kind of vehicle that, you know, like make real estate, when you know how to park where your money is, it is a great asset class. At least for like the residential space, like commercial space, it is more linked towards business behavior, supply, demand, GDP, etc.
So, and just to add on to what Rong said, is that during when the government needs to inject money into it, is very limited, restricted injection of it. That means they inject by more grants and all that kind of thing, and it's only specifically to build that sector in the country. They are not gonna like, hey, I give you this amount cash and then up to you. Or I give you this relief and then you spend it however you want. They can inject it through education. They can inject it through property and all that kind of thing. Yeah.
And also there's another one is the protection of land pricing. So every piece of land that is going to put out on government land sale, there is a reserve pricing, right? That's why there is a CB land plot that was bidded under the reserve price and then it cannot get sold, right? So that internally is like, you know, like, let's say, you know, like we decide, you know how we play Monopoly, right? Then we decide, okay, this one is going to be $350. You cannot buy below $350 unless, you know, like it's an auction sale. So like we make sure that this thing as long as the fiscal policy don't collapse, right? You can determine what is the pricing and you keep adjusting the pricing upward. So like now the CBD, now the OCR pricing is probably, like how like the CBD reserve pricing is going to be maybe like 30 years back, for example. And you keep increasing that value over time.
And maybe a question for Grayce is that why is Singapore different? Because that will relate to the behavior against the interest rate. The norm is that interest rate increase, price drop, right? For example, in US and many other countries. But why is Singapore different compared to other countries?
Okay, maybe you can pull up my slides. Yeah.
Oral question.
No,
Oral
sorry.
question number 1. Imagine this turns out in like O-level oral. Why is Singapore different
If this is oral,
from the
will be
rest?
good,
Wow, liao sia, I tell you the
Never
person
end,
stress sia.
Okay.
Actually, for oral
Okay,
examination, right?
Yeah.
Your answer, whether is it factually correct or not, it doesn't matter. It only it just need to sound logical.
No, but can you imagine if someone pulls out, okay, so if you look,
Okay.
teacher,
done.
if you look at the M2 money supply, we are at 782,000 million circulating in the current Singapore
yeah.
Then
economy.
you will impress your teacher lah.
Wow, the teacher go,
Because
Sure.
maybe the teacher don't know also. It's like, wow, 这个小孩在讲什么? And actually, what you can learn from here is this, right? When you don't know something, then you just say it very confidently. Then the other party don't know what. Then they will think that like, so that's how you
But
excel in
do
oral
they fact check?
examination.
I don't think they fact check also. There's no time to fact check, man. They mark on the spot.
In oral.
Like
Yeah.
I
Oral
mentioned,
is about
it's not
oratory skills. It's not about
Yeah.
the
Yeah, but
fact.
you must have the correct content. You cannot.
No, why?
Okay lah.
It's how you articulate. what.
I very long never take oral, yeah, so.
Yeah, but okay, design oral.
Yeah, it'll be oral test.
the editor,
Okay,
I
come,
think need to
come.
cut this out because we sound a bit like too non-PG already. I think like
It's okay lah, put it in lah.
okay, then just cut my part out.
Let's cut your part of saying cut this out. Okay, come. To answer Melvin's question about why is Singapore different, I think actually, fun fact is that, we have this PLB Insights article. It's called the Singapore Exceptionalism. Yeah, so it's talking about why Singapore is different from the other economies. So we can dive into the base tier levels to protect, right? So cooling measures is one, TDSR is one, stress test is one, even the detachment from SIBOR to SORA. That is also one way to protect the interest rates in Singapore. All of these are part of it, right? But I think one thing that we have not mentioned is also about supply. Actually, something that we don't think about is that when interest rates actually go down, supply will decrease in the market. When buying power actually goes up and more people are buying around, the actual supply of homes in the market will decrease. Right, this is not something that I think people think about, because usually we'll think about like the affordability and all of this. But the fact is that supply decreases, which makes it, I wrote this article, by the way.
Oh,
As
Awesome.
as an intern.
Well done.
last time
Yeah, 2021 as an intern.
recently I just wrote an article. Can you help me to publish?
Sure.
I just wrote it on the plane last week.
Then when he launches, we will clap for you also.
Okay,
Yeah.
yes.
This is me as a 3-month-old intern. Yeah, so I talk about interest rates.
You are so smart as an intern already. I'm so impressed.
Yeah. Okay, so basically, in this article, there's
Oh
actually
yeah, you
4
mentioned this is
reasons.
your first article, right?
No, it's not my first article.
But it's his best article.
Not my best
During
article. lah.
during the internship.
It's
during
my.
the internship.
I was 3 months old lah. I joined in May. Yeah.
Wow, 3 months old in this lifetime, you already can write the article. It's awesome, man. You're so talented.
Is he very annoying? Okay.
The
Okay.
Singapore exceptionalism.
Okay lah.
So what's the main
Huichi.
point you want to say?
Yeah, the main point is First thing is talking about supply. Okay, second thing is also about the holding power of Singaporeans, right? So, okay, that means I just want to bring in the other softer factors that we might not consider actually. So, when we examine why
Why?
Also, when we examine, in terms of the relationship between like the interest rates and property prices, we always think about the measures that the government has put in place to protect pricing. But I think we don't think about the softer, more intangible factors, which is that, okay, number one is the amount of supply. Number two is the holding power of Singaporeans. So in this, at the time of the research, back then it stated that, okay, the holding period is about 9 years. And ever since the introduction of seller stamp duty, the percentage of homeowners who sold within the first 3 years dropped from 40% to 2%, and it has hovered there ever since. So I think all these combined, right? And the fact that a lot of Singaporeans are actually homeowners, right? So in the article, I also talked about only about 10 to 20% are mainly like buying for pure investment. But majority of Singaporeans, now, especially with the ABSD, they're buying for own stay. So when you buy for own stay, generally there is a longer holding period, even though we say that, I think
A lot of people think we are flipping,
yes.
right?
In the last live debate, one of the teams brought out, people think that, okay, your property journey, it consists of many cycles because every 3 years you buy and sell. But in actual reality, this is not so, right? Singaporeans actually, they buy and they hold. So a lot of the properties are not pure investment properties. They want a certain amount of capital appreciation, but actually a lot of people are buying for own stay. Yeah, so I think these factors do affect property prices, especially when interest rates rise or fall. Yeah.
Awesome. While Grayce was speaking, right, I was looking at this. Oh my goodness.
We have this.
This was in October 2022. Back then, I was like conducting a training
Yeah,
on-
I remember this.
on how to talk to our buyers and investors about the fear of interest rates increment. Because back then in October 2022, when the first tranche of news came out, talking about Fed rates increasing, mortgage rate interest increasing, everybody is fearing that the price will drop, and they want to wait for the price to drop when interest rate rise so that they can buy cheaper. So we came up with this 33% concept to look at different scenarios. And actually back then, if you notice, how much was the interest rate? Like, it was like
2.5.
2.5, right?
Yeah, so we're saying if it drops and becomes 1.5, or if it increases and becomes 3.5.
Yeah, and we're saying that, okay, if it drop, naturally price is going to inflate. If it rise, what if price don't drop, but it stays
No,
still or increase?
No, actually the 3-3 theory, right, at the time when you were explaining to us, is basically that, okay, there are 3 scenarios. Maybe price will drop, interest rates will drop, interest rates will maintain, and interest rates will go up. Then in every of these 3 scenarios, there's another 3 scenarios, which is price drop, price maintain, and price increase.
Yeah.
Then what happens?
Yeah.
But we also have this calculator in our PLB.
33% calculation. Oh, yes.
Yeah, we have it and it's live and
Thanks,
it's used as
Lyndon.
under the asset progress and
Oh, which one?
below.
Hey, how did you come up with this
Below.
framework?
But
You just thought of it.
but
Yeah,
actually,
It's just a...
it's a concept.
You have to
Yeah,
layman
yeah,
a lot
yeah.
of things to.
Anyway, don't show this screen. I can see Melvin's number.
Hey, shucks. Hey, I don't even know my password.
You are the founder, but you don't even know your password.
Hey, what is your Marcus or password?
I don't know. I just asked him previously. I also don't know what's mine.
Oh my goodness. Hey, I got a pain of all these passwords.
Log into
Yeah.
mine lah.
Okay, 33% calculator. Okay, anyway, you guys can play around with this. This is very
I don't
helpful.
think they have access.
Yeah. Okay, I'm sorry.
You have to
Talk to any of our consultants for this. Okay, anyway, this is a scenario whereby the most basic fundamental scenario is that if, let's say, how do I explain this? Like, okay, let me bring out this very layman one. Okay, come. Too many frameworks already. Okay, here. No matter which route we take, we are always only 33% correct because it's safer. It's still safer to enter the market because if you look at this, if we always time the market, we're just betting against this scenario. But what if price remains the same? Or what if price appreciates? Then technically, we are always losing out to the 66% probability because we're always hoping for price to drop. So actually, if we look at October 2022, interest rate 2.5%, now is 4%. Did price increase?
Yeah.
Price just exploded, right? So actually, the sad truth is that a lot of the buyers that has waited out or timed the market back then, they are already priced out already because landed property has moved up like so much. Condos, new launches increased by, like $400-500 per square foot. So I think the most important thing is really to understand the fundamentals that we've been talking about. Why Singapore is different? Why is our landscape different? Why is our land size different? Protection of GRS land price, behavior of interest rates as well. And I think by understanding Singapore's property market fundamentals, is really going to help us to make a decision on why should we invest in real estate here, when should we invest in real estate, and then once we solve these two macro problems, macro mindsets and fundamentals, then it comes to the last thing, is that how can we then use framework on a micro basis to hunt for the right one? Because there and then again, not every property will appreciate. For example, just now Grayce mentioned, some property will still depreciate, some properties will be stagnant. We still have to use a final puzzle, is to use micro frameworks to identify the right properties. And sometimes certain properties not just appreciate by 20%, they can explode by 50 or 100% if you find the right project and the right kind of sizing, bedroom type, locale. And that is, of course, where disparity and pairing strategy comes in. So I think maybe before we end that, let's just give a roundup of from all our NOTG presenters on like final note on interest rates 101 to share with our audience, like any final note or final viewpoints on interest rates before we end the episode.
We haven't talked about like what is the prediction in terms of interest rate upcoming.
Oh, yeah.
And then like
This
how is it
year.
going to
Okay,
skew?
we use this.
Use it
We
in
use
the
this.
rounding up.
We talk in the rounding out.
Okay, can you go to my slide?
Sure.
He's gonna show you
Don't
Bitcoin and
change
gold.
his
Already.
slide.
Okay, so I think like there are a few couple of things to like discuss, what's going to happen to interest rates, like US interest rate first, right? So there is a projection of like interest rate potentially up to like 3 rate cuts this year. And of course, why can it be down? Of course, fundamentally, like unemployment rate, very stable, 3.9%. And you can see inflation rate since July 2023 has been very stable at 3.15%, right? So all these signal that there is a possibility that we can now introduce rate cuts because inflation is now a little bit more controlled in the US. And of course, GDP is still performing well in the US market, right? So a few key things will be this. We want to understand that from March 17, 2022, 11 rounds of rate increase. And of course, we increase very, the gradient is very strong, plus 0.5 percentage points, plus 50% basis points, plus 75% basis points. So it reached the peak rate. So this is the highest in the last 16 years. So when we talk about rate cuts, right, there are two scenarios that can happen. Usually, if you're looking at crisis, then you will see this kind of rate cutting. Very, very strong. It comes in very quickly. So 3rd of March, minus 50 percentage basis point, and then another 2 more weeks, minus 100% basis point to go down to 0%. So usually you see every crisis, it will go down to 0%. In a traditional area where we have well-controlled certain scenarios and then we are just doing our rate cutting, right, it will be usually something that is like slower, minus 25% basis point. So you can see that actually I think like the market has already started to factor into the rate cutting rate, because when rate cuts, which also means that borrowing costs will be reduced and then other asset classes will go out in pricing. So that's why we see 10% price increase in S&P 500 index. Bitcoin has been doing well. Where's my Bitcoin? Bitcoin this year, 58%. So does it make sense to arbitrage? Buy Bitcoin first, then buy property later?
Actually, I think the best is
Buy both.
Sell your property, buy Bitcoin.
Bitcoin will be the proponent to store your down payment at a fantastic acceleration. So it will be a good pairing with real estate in Singapore. Yeah.
So something very interesting will be that, like, of course, what we are trying to say is that like the next, if interest rates were to come based on projection by 2024, overall Fed interest rate should cut down by 1 percentage point. That should happen maybe closer to early part of 3rd quarter, 4th quarter. And how in Singapore, how we react to it is maybe at the start of the 2nd half of 2025, then we will start to see that decline in terms of our floating rate to try to match up to our fixed rate, right? And of course, like the plus point will be stress test will go down lower, maybe back to the 4%, and then we are able to have increased affordability. So that could have renewed interest in terms of people coming to the market. The other thing will be very interesting is if let's say this year this continues with regards to S&P 500 continue to climb, as well as Bitcoin continue to climb, right, we will be able to see something like that. So if you were to see this different kind of liquid asset classes versus property, right, you realize that number one, 2020, during a crisis, liquid assets dropped averagely 30%. Singapore residential is very strong because of cooling measures. You can see in 2021, right, basically it was a money printing year, monetary policy introduced. Every asset class went up. Of course, now we are talking about real estate without leverage kind of price increase versus maybe more liquid assets going up to 30 to 50%. But you can see that one thing is for certain is that when 2021, right, other asset classes, let's say more liquid asset classes go up by, like a strong amount, right? There will be people who want to lock in their profits. And when you lock in your profits, right, where will you park your money again? Definitely will not be in cash because that will be a strong eroding in terms of purchasing power. And one of the next best way to park your places is in very strong real estate. So that is the reason why you can see that when other asset classes go up, you can see that the next year, there will be a strong improvement. So for example, 2020, strong improvement. Then 2021, you can see prices start to go up for real estate. So does it mean that potentially we might be able to see a similar phenomenon? Let's say, like in end of 2024, close to 2025 early on.
Very possible. I think the locking of profits is very real because naturally, if your tech stocks is making money, your Bitcoin is seeing profit margin, you will want to take out the liquid kind of margins and then put into a harder asset. So my own personal forecast is that we will shift back to a seller's market. The moment the first rate cut gets announced, of course, you just look at business time. US has just had you just go to YouTube, you look at that 3-hour session that they had. 3 rate cuts. Once the first one happens, it's going to shift gear. Sellers will become more confident in Singapore. Buyers will start to come back. And I think this might probably last for 2 years because if what Rong is mentioning is true in the sense that, let's say by 2025, a lot of people start to take profit from their liquid assets and they funnel into real estate, then we're going to see this last a little bit longer. That's my own forecast. Thanks, Rong. How about Grayce? What's your any final thoughts?
So I think looking back, in let's say our performance, real estate performance in 2023, it has one of the lowest transaction volumes, and it kind of mirrors what happened in 2019. Yeah. So what I really think is that to me, I think history always repeats itself. If you were to look at certain things, right? And I think my final slide, the quote. Yeah. So interest rates, basically, it plays with people's emotions. Right? Actually, I wanted to find the slides of where we altered the news article. What if one day you wake up and then you see that interest rates are, for example, at 1.5%? Actually, how would you feel as a seller and how would you feel as a buyer? Right. So today, So for example, you wake up and you see on Straits Times, right? Home loan rates expected to drop to averagely 1.5%. What should homeowners do? Actually, how would you feel as a seller, right? I think as a buyer, I think you will feel that, a lot of buyers will think that, I can buy already because I can afford, I can afford, not say afford more, but in terms of your monthly mortgage, it's more affordable now. So you'll be thinking, I think it's a good time to buy. And then when a lot of buyers are looking to buy, I think how would you feel as a seller today if you want to sell, right? Would you sell under valuation? Would you sell to the first person that comes to view your home? Or would you sell at a premium above valuation, right? I think sellers will feel encouraged by the renewed interest. And it actually just mirrors the situation, that we are looking at a couple of years ago when the pandemic hit, the interest rates dropped overnight. There was a lot of renewed interest in the real estate market, right? Of course, at the time, it's unique to the pandemic because a lot of buyers were also looking for more space, right? So that's the situation. But
you cannot stand their family members. Right?
I still remember back then after the pandemic, every weekend, right, the office is flooded.
Yeah.
Everybody is back printing OTP. That's the situation back in office.
Yeah,
there should be a printer at home. Why need to come down to office to print OTP?
People like to come to the office for the finale one. I don't know why.
Like maybe you need to install a bell, then you ring.
We should the Selling Sunset bell. Yeah, but anyway, I think that actually we are in a very, very, very similar situation back in 2019 where transaction volumes were very low as well. 2023 exactly mirrors the same pattern with the announcement of the interest rates dropping in Q2, Q3 this year. I think we can really expect a renewed interest in the real estate market. I think if you are looking to buy, an important thing to ask yourself is, should I, actually take action now? Or do I want to wait until interest rates drop? Of course, that will mean that, my monthly mortgage is lower. But of course, that will mean a lot of more competition as well.
I think, of course, like interest rates not going to drop overnight unless it is a crisis, right? But the good thing is like looking at how, like the other liquid assets are performing in terms of pricing and the potential rate cuts, looking at all these projections. I think like if let's say you are already in the market, looking to deploy your funds, and I think like there are good opportunities that you can actually identify in the next 3 months for you to take action. Of course, I think like something that will really rock the market in terms of newspaper article is, let's say, for example, they say Singaporeans
Can buy more than 2 properties.
ABSD for second property removed.
0.
Wow, that one will be immediately spike up in terms of like the kind of demand. That will be super scary. But
Yeah.
it is so sticky now, you cannot remove any cooling measure anymore.
Yeah, so that's the thing, right? Like if these cooling measures were removed, prices will shoot up, right? And then also like you mentioned,
Shot like Bitcoin.
yeah, I think so, right? Maybe April Fools they should announce, right? Yeah, but anyway, what it means in conversely is also that these cooling measures also protect the pricing. They ensure, there's not too much volatility in terms of pricing, and it protects the market as a whole, right?
I think it protects like the usual homestayers, like somebody that doesn't, like invest too much. You're not going to get a lot of like cheap money, foreign intervention that, like foreign money come in droves when the market is favorable, and then they leave, and then all the consequences are being borne by Singaporeans. So I think like that is the best point of cooling measure, and I think that really solidify, like real estate as Singapore residential real estate as one of a very important asset allocation amidst your other form of investment. I think like when they are combined at the right allocation percentage with your ability to manage certain risks and your ability to like grow in other asset classes, that is going to give you a very strong and secure way to actually grow your wealth.
Lyndon, any final?
It's called Mr. Leong.
Mr. Leong. Who is Mr. Leong?
Because the last week we were
Leong,
shooting Cascaden Reserve, right? And then like something very interesting was because I love the feeling of like when I come back, then the concierge will like greet me, then say like Mr. Leong. So I started calling him Mr. Leong.
No, so we're talking about luxury
You shot a home tour
developments.
together.
No, it's like a new launch.
A new launch.
Oh.
Yeah. So my closing thoughts are quite similar. But number one, interest rates, you cannot purely look at it and base it off what the market reaction will be. So it doesn't affect drastically, because you have to take into account what is the supply, what the developers are having, how much are there in the market. Then number two is affordability. I'm always pegged towards it as affordability with the increased stress test and all that kind of thing. Loans for a certain quantum is going down also. So then that brings me to the next point where Rong mentioned, the funds have to come from somewhere, whether it be it from the S&P, whether it be it from your Bitcoin, the stock market,
Or cash
or cash lah. If those perform, you are able to come out of them, then they have the funds. So in the COVID, definitely it was from the market, but it's also you were restricted. You couldn't spend money maybe overseas or whatsoever. You couldn't like have those kind of big purchase ticket. So they had a lot of funds. So the money must come from somewhere. Yeah. So those will be my closing thoughts. It has to come from somewhere in order for the market to move further.
Money will always flow from riskier asset classes to more wealth preservation classes. So that's why, like that's that correlation.
But also just to end off is that for Singapore, we are very lucky because we are pegged to so many things like TDSR, whether can we really afford stress tests and all that kind of thing. But for those that really want to know, like will Singapore have a bubble and all that kind of thing, a good movie that I started out much earlier was this movie called The Big Short. Not too sure if you have watched
Lehman
it.
Brothers.
Yes.
Yeah.
So The Big Short helps you to understand, but when it's not regulated, right, you get like stuff like ninja loans, no income, no job. Then people having like 2, 3, 4 properties.
This thing affected Singapore, ma?
Yes, this affected Singapore. So for those wanting to know whether interest rates and all that kind of thing are purely pegged, this will be a good thing to look, but it doesn't necessarily relate to Singapore because the government has planned it out much more.
A lot of people lost their
better.
savings, Freddie, Fannie Mac, because
Banks collapse because of
this
over leveraging.
they price it into a lot of like all this investment
Because
Because
instruments.
they
took
create a lot of
lot,
derivatives, because
took a
from
lot.
housing loan package, they package into like all your other instruments to sell as AAA rating bonds, which supposed to be safe. And then when one collapse, everything
just go
They were
down
selling
the
housing
drain.
cards.
to retail people in Singapore.
Yeah.
And a lot of people lost their hard-earned savings.
So I think one last thing is also that I don't think the whatever happened during the pandemic will repeat itself. I don't know, maybe in our lifetimes, maybe yes lah. But in the next couple of years, I don't think so. There were a lot of unique circumstances that happened. It's a worldwide pandemic, right? No traveling and everything, and a lot of one other thing is also that the fact that Singapore managed to prove itself as very politically sound. Yeah, that was one thing that attracted a lot of foreign interest as well, which is why later on there was a lot of new cooling measures that came about, then especially with the ABSD for foreigners as well. So while I don't think that it will like repeat itself in that scale, the numbers do look like when do show us that when interest rates fall, what is the consumer's mindsets and behavior.
I think to end off is that I just want to show this chart. So there's this thing called the boom and bust cycle. And unfortunately, it is very much pegged to the actions of US Fed interest rates. Every time when rates decrease, you're going to see S&P 500 go up. You're going to see renewed interest in home prices. You're going to see like home prices shooting up because it seems like a lot of our behaviors and consumer behaviors and action taking kind of behaviors all correlates to how high and low are the interest rates. So something to note is that this is technically also very unhealthy in the sense that there's a trend to see the boom and bust cycle getting closer. It's like in the past, it used to probably be like once every 8 years, then it shrinks to 5 years. Then now it's like every 2 years, they need to adjust it upwards or downwards. QT, QE needs to come in. And now, actually, quantitative easing is not on the surface anymore. It is actually stealth quantitative easing because central banks in US, they can, through sort of like the backdoor support towards certain banks to prevent them from collapsing, they can buy up their bonds and things like that. So there's actually stealth injection into the money supply system. So all by and large is I think we as retail investors, we just need to understand that when there are certain opportunities for you to take advantage of, especially in low interest rate environment, you need to really be prudent, not to overspend in times where interest rates are very high, because you need to really keep that capital in order to be able to invest when there's opportunity where it presents itself. And of course, the second layer is that when you are in Singapore, if you are into real estate investing, then know that you're in a very different country. Opportunities always arise, even in high interest rate environment. So whether is it high or low interest rate environment, because we have so many things, we have cooling measures as a bedrock, we have our HDB home prices as a bedrock, GRS as a bedrock. So opportunities presents itself at a different level. So fundamentally, globally, look at interest rate. Secondly is that locally, look at our home country. And then thirdly is look at the micro investing factor. So we hope that you enjoyed this Interest Rate 101 episode with NOTG. Do remember to sign up for our NOTG community channel on Telegram. We hope to see you there. And also support our other channels on PropertyLimBrother's home tour channels, the main channel, PRB Insights, where we talk about new launches. We hope to see you also on our PRB webinars, which is coming up. And meantime, take care. Bye. Bye. All right.
Don't drink water. Drink Grayce, don't drink water. Lyndon, do you drink water?
I have my own water bottle.
Okay, then can you give me that? Wow, this pen is quite nice.